So we go right next into our first panel session for today, and I have one of my faves on that panel. They will be talking on the business of payment. So for the next 50 minutes, we'll listen and we'll have the opportunity to ask our panelists questions. Please join me as I welcome our moderator for today, Nkiruka Uwaje from Grovvth Advisory. Please put your hands together for Nkiruka. Yeah, from Moniepoint, please welcome Solomon Amadi. Solomon Amadi. From AZA Finance, Elizabeth Rossiello. Please, I hope I didn't murder your name. From QED Investors, Gbenga Ajayi. And from Interswitch, Folayan.
Great. Good morning, everyone. First of all, I'm so delighted that this time around it's not December and we're not here in the cold as usual. So thanks, Andrew and Lauren, for that. Great to meet everybody. My name is Nkiruka Uwaje, and I run an advisory firm focused on helping startups in a near-term growth strategy. Today, we're going to talk a little bit more about the business of payments. And if you think about a decade ago, payments fintech started to pave the way in really transforming the continent, building really vital infrastructure for the continent, where historically, even just paying someone in your neighboring country was near to impossible when it came to real time or without having extraordinary fees associated to it. Fast forward to today, payments fintechs represent the backbone of the continent, having created the foundation needed to help leapfrog Africa. Yet, there is still so much more to be done, and today we look back at the lessons learned and discuss existing challenges and opportunities that lie ahead. So joining me on stage is a wonderful panel of leaders in the payment space. So over to you for an introduction.
Thanks. I guess I'm the shortest leader in the payment space. Thanks, Andrew, for these chairs for giants. So I'm Elizabeth Rossiello. I'm a founder and CEO of AZA Finance. 10 years ago, I started a company called Bitpasa in Nairobi, Kenya, which was either a great or terrible idea. It was about 10 years too early for digital currency payments. We rebranded 2 years later, and now we count ourselves as one of the largest non-bank brokers on the continent for trading foreign exchange. And most importantly, when you create something in a frontier market, it's important that you build out the infrastructure. So actually, most of our business is the infrastructure, of course, cross-border payments, and then we trade on top. And today we count some of the largest global players as our clients, as well as many fintechs in this room, and some of the largest traditional financial institutions, which we call TradFi, who are actually now, finally, 10 years later, joining us fintechs, working and building towards the future.
Awesome. Thank you. Solomon?
Yeah, hi. Good morning, everyone. And I'm probably the youngest on the panel.
Hey, watch it.
Yeah, so hi. All right. I'm Solomon. And 10 years ago, I used to work for a security company. We do payment card industry data security standards, and I used to do some ethical hacking and pen test. And then fast forward to 2015, I joined CMAP, now Moniepoint, as a software engineer, but I was one of the founding members of the company. And over time, I've worked across like switching infrastructures, payment gateways, web payments, and a lot of other transaction processing systems. And we've built several financial solutions for banks and other fintech companies. And today we are providing business banking solutions to the last mile to merchants and businesses across board. So yeah, great to be here and looking forward to another session.
Great.
Hi everyone. You didn't mention I'm pitching Moniepoint because it's a portfolio company.
Yes.
Portfolio company of ours.
Yes.
Reaching 400,000 merchants today.
No, I think we're like almost 1 million merchants now, if not over 1 million merchants now.
I learned the best thing as an investor is always ask a question, put the wrong number so they can correct you. Hi everyone, my name is Gbenga Ajayi, and keeping it theme, I'm the only investor on the panel. I am a partner at QED Investors. For people who don't know the room, QED is a global fintech VC firm headquartered in DC. We invest in only fintechs. We have, I think about 220 active companies, 22 unicorns, all in fintech across 13 countries. So I think with fintech we're like a kid in a candy store, especially in Africa. And we started to invest in Africa. I joined sort of late 2021, and Moniepoint was our first investment. We've made subsequent investments in a company called Flapcap in Egypt, in a company called Power in Kenya, and another one yet to be announced. So yeah, we've seen different types of payments companies in different parts of the world, and excited to be invested in Africa.
Chris?
My name is Chris Folayan. Previously with Mall for Africa, I was the founder, CEO, CTO, CMO, all those things, of Mall for Africa, which was pretty much one of the pioneers in allowing the unbanked in Africa to actually purchase items from US, UK, and foreign retailers. Now with Interswitch, as many of you may know, Interswitch is one of Africa's first unicorns and a major fintech company that is known for its switching capabilities, which is what happens when you swipe your credit card, everything that happens in the background to move money from point A to point B. So that's the company I'm with right now, and exited and sold Mall for Africa.
Awesome. As you can see, we definitely have the right people here on this panel to discuss all things payments on the continent. So maybe over to Elizabeth. Tell us a little bit, since you've been in this space for the last decade with AZA, what have been some of the kind of key pieces that you've seen evolve over that time span?
Right, and we had a very lively prep call for this chat.
Lively.
Usually I'm sleeping in those prep calls, but this one got lively. It's such an interesting time. So many of the African unicorns are in the payments space. Interswitch was our first infrastructure provider when we entered Nigeria in 2015. It was such a battle in the early days, and every global investor that we spoke to, and Andrew's right saying, we were raising tiny checks back then, would say, why don't the banks do this? Or when are the banks going to come in and do this? And now we're welcoming the banks as our clients. It took a decade to do that, but we're still at the infancy. And I know that's a very common catchphrase of a lot of people globally, but there's so much more work to be done. And if you look at just remittances, which is one of the driving segments that the payments sector processes, it's grown from 34 billion to almost 90 billion just in the last 5-6 years. That's mega. So we're not even talking about what is the market size. We're talking about where is the market growing. And I think you can't ignore that. However, the CEO of Visa last week at the Bloomberg conference was asked why he loves investing in Africa, and he just pledged another $1 billion into the continent. And he said he's so focused on it. But when the moderator said, at what point will this be a significant point of your revenue, he said at least a decade. So we've already been working a decade. We're already a little tired, except for the young ones. But we're we got another 10, 20 years ahead of us, right? And I think, it's exciting because it's so big. This is like ultra marathon. This isn't a regular marathon. There's still so much more space to go. I think the one exciting thing that we've seen, and of course we famously, butted heads in a major way with M-Pesa a long time ago, is that the telcos are no longer the kings. And that's an exciting thing to say, and I say it every morning. When we first integrated into Interswitch to do bank payouts, it was like a breath of fresh air coming from Kenya, where everything went through, the overlord. And, now we see those mobile monies still happening, but even remittances, small value remittances are going through banks. That's exciting. That means that we have it, that we've kind of people talk about leapfrogging. Well, we've leapfrogged almost mobile money in a lot of ways. And banks are becoming more accessible, and the vertical gets closer. So, the best advice to those entering the payment space right now is you need a defendable business model with a defendable revenue stream, because we're still evolving. Tectonic plates are still shifting. Just because you're a king right now doesn't mean you'll be a king tomorrow. And so I think it's really important to think about what infrastructure is so exciting right now, but might not be in 3 years. Inside our company, we always joke about cards. We say, cards might be big right now. You might be seeing all these unicorns with big card revenues, but our cards going to be there in 5 years? When we're seeing fiber connect the continent, when we're seeing cost of internet reduce, what is the future of payments? And, I don't necessarily think it's going to be owned infrastructure by any companies. It's going to be more accessible.
Chris, where do you see some of this growth, right, happening on the continent, and what have been kind of some of the takeaways that you've seen within the last decade in terms of how that transformation has happened?
Yeah, I see growth. So there's been growth in trust and reliability and speed. Those are the three main ones. I think there's still a lot of growth that needs to happen in those three sectors or areas, but those are required for us to actually move forward. Trust is something that you'll only get when you're able to verify where the money is going, who it's being sent to. So developing applications and processes that allow that to happen. Then the reliability on speed has increased. I mean, we've gone from 5 seconds down to 2 seconds down to 1 second now with moving money. And that is very important, mostly when you're working in a society that's used to doing things the old way, which is, give me money now, give me products. So that instant gratification. But being able to do that on a mobile device, pretty much as quick as you can, just giving somebody cash, is really important, and that's where we are today. So there has been a lot of growth in that perspective. So I think between, again, trust, reliability, and speed, we've definitely grown as a continent in that respect.
Gbenga, can you share a little bit in terms of how you feel that this last decade of building that infrastructure has really contributed to the macroeconomic landscape of the continent and kind of some of the positive impacts of that?
Yeah, actually, just to latch on what Chris said, trust, reliability, and speed. I love the framework. I think sort of if you on the first two prongs, reliability and speed actually has been much better over the last decade. It's not like UK standard or Europe standard, but if you think of for example, like, in places like Nigeria today, you could actually go and have a card transaction where there is no bank for at least like 10 miles, and the card transaction will go through, right? Like, that's happening today. That wasn't happening 10 years ago, right? So in terms of reliability and speed, we've actually seen like a leapfrog and things have gotten better. Where I think there's been an issue why we haven't really seen the explosive full benefits is on the trust side. And I think that's where like a lot of focus kind of has to happen now. I mean, if you look at the US, there's no real-time payment, right? Like, speed in the US is actually quite terrible, but there is trust, right? Yeah. So actually, you want to have trust more than you want to have speed. People think speed solves trust, but actually really doesn't. We saw that with the sort of cashless policy with the Central Bank of Nigeria and what that led to. Now, of course, you have an extreme case like Kenya where you have all three, you have one kind of dominant player where everything happens on the same network. But I think we all know like the rest of the continent is not going to be one M-Pesa in each country, right? It's going to be a little bit more like of fragmentation. So I think on reliability and speed, there's been like leaps and bounds. If we look over the last decade, we're not quite there yet, don't get me wrong. But I think where we're really lagging is on the trust side. I think people actually, the mental model is like you can hack your way through reliability and speed, but actually trust is actually what's like, needed much, much more. And then in terms of contribution to macroeconomics, I think the jury is still out on that, but we've kind of seen the involvement of payments in, even smaller countries outside of Kenya. We always talk about Kenya. I think Kenya is a little bit of an anomaly here, where, fastest growing form of payments in Nigeria is, I think, account-to-account transfers, as of today, right? Like, it's unfathomable to think of that sort of 5 years ago, right? You have, I think, CNP transaction, card not present transactions, growing at about 150% year on year, right? So there's all of these, whether it's on mobile money tokenization, whether it's actually sort of like debit cards. So we're seeing lots of people now starting to kind of be counted in formal figures in the way that like couldn't be before. But I think that's just like sort of when Act 1. Act 2 is when you're going to be able to build on top of that. But the contribution to the macroeconomic, I would say, has been significant over the last decade.
Definitely, I think a very good review in terms of the last decade and in terms of where we are today. So kind of just shifting gears in terms of like the current modus, right? Solomon, tell me a little bit more about like what's the current state of payments in Africa right today? Where are we seeing, some of the shifts happening into the future and saying, okay, these are the markets that are really growing, right? We hear Nigeria a lot, but clearly there's other areas that are definitely in that hyper growth when it comes to that payments infrastructure.
Yeah, so just building on what Gbenga said and also Chris, like the trust, reliability, and speed. I'm seeing we've seen that trust is a major component in terms of shifting the dynamics of payments, because people tend to need to start trusting the system, trusting the infrastructure over time. And one thing that we've also done in Moniepoint and also other agencies across Africa is they've built this trust by creating like distribution networks across the board. So one of the major problems is in Africa there are diverse languages. So you don't have like you have like formal structured banks like you walk into and they mostly speak like a unified language, maybe English language. But then we're building these different clusters of networking people and agents. You tend to like communicate more in local languages, thereby building trust with the local person, the last mile customer down the street. So yeah, there's been a shift in terms of, over the last 7 to 10 years, there are card payments, and now we are shifting to account payments, and then we are seeing the push towards contactless payment next, right? So we envision that in the next 5 to 10 years, we should be able to adopt like more contactless payments technologies, and then maybe cards might go down a bit, but not completely die, because cards still like a big major driver of revenue in the economy. So in the next maybe 5 to 10 years, we are seeing a push towards more account-to-account payments and then contactless payment. But all this will only work, like we said, building trust, and then that's that distribution network that you build to make sure that the customer can communicate properly in the local dialect and be able to trust the entity that he's paying to or he's paying with, basically. So yeah, that's how I would say it.
We talked a lot on our prep call about payments being really the foundation, right? And now that foundation has been built, we're seeing a lot more kind of other applications being built on that and really starting to say, well, we can use that payments infrastructure for other things. We talked about lending and credit. Tell me a little bit more, Elizabeth, in terms of how you're seeing that starting to evolve.
Yeah. So a lot of our clients are fintechs or banks that are looking to get into fintech services, and they need cross-border payments, they need foreign exchange, they need treasury. And if we just look at the trend of our clients, which was very heavy on remittances, it's now going into obviously lending, but more exciting as a capital markets fan is all the investment fintechs that are coming in. Because, everybody here has been to enough conferences talking about the bottom of the pyramid and, people who have no access to finance. What about the growing middle? What about these young 20, 30-year-olds who have a little bit of cash, not a ton, want to invest? I think he's got a little more than that.
We need
Something tells me he's got a little more than that. Who are investing. And, one thing that we've always talked about at AZA is why can't we connect African wealth to the rest of the world? Why are you allowed to invest in a Fidelity product when you're like a knucklehead 21-year-old in New York and you can't do the same thing in Lagos? And I was at Bloomberg like 2 years ago, and they were like, oh, it's just speculation. And I'm like, how did you guys make your money? Yeah, how dare you? What are you doing in an hour? Speculating. Why is the African continent not allowed to speculate? That's another topic to talk about. But I think, seeing the investment is exciting. Now, okay, there's trends and bubbles, and everybody got excited about digital currency investment, and you see these little pyramid bubbles come across the continent, boom and bust. But, I think what Oscar did at the Nigerian Stock Exchange for a while and like the local stock exchanges, there's some paper now being offered by some fintechs in Nigeria and elsewhere. You have derivative licensing that's come out with the SEC in Ghana. We're really making efforts there to show more differentiation in the mid-market, and that's exciting because, we love to see our customers grow, but that's where you see the real need for African FX and Africa currency pairs. Why don't we have already a lot of ZAF flow? Why don't we see that grow into not just a business payment or an invoice, but more of an investment? a big part of the reason that we haven't seen that go is there are no forwards. Not to make this FX nerdy, but it's a spot market sale globally. I mean, you still just see maybe T7, T5, no one's really doing 30-day, 60-day, 90-day forward. So how do you think about investment? As markets become more liquid, as more brokers come into the market, as people feel comfortable that they're going to be able to get their money in and out, so that payments in that middle layer is super important, people feel more confident that they can invest in another currency, and while I don't agree with Ruto on a lot of things, I was very happy to see the president in Kenya talk about that. Why are we always using the dollar? We need to use the African currency pairs to trade in the continent. And I think that's the next big exciting step in the next 10 years.
We'll talk a little bit more around that monetary policy and those shifts that are happening. But I want to just double click on, we talked a lot about trust and, from Solomon and Chris' perspective, I know you also talked about KYC. What are some of the components that now that you have that, again, that foundation, where you think, especially in KYC, but also kind of credit checks and understanding that user, like what are some of the components that you see being built today? Yeah, but both of you are...
At the same time.
Yeah, all at the same time.
I think a lot of applications are definitely being built based on trust. There are biometric platforms that are coming up that are self-identifying the individual and then verifying different purchases that they're making. This, I think, is the foundation for what should end up becoming universal credit scoring across the platform. I know I've spoken to some individuals here who are working on platforms like that, but that whole sharing of the credit score across the platform is something that is missing in the ecosystem. And it comes down to trust again, I guess, if you think about it. One bank doesn't trust to share its information with another bank because they consider it their own data and they don't want to share it with another bank's data. But hey guys, if you guys work together, guess what? Now everybody understands that that guy has actually taken out 4 loans. It's not just one loan that you're looking at. And now if he or she is paying it back over time, now we can increase their credit rating and so on and so forth. So there's institutional trust that's not taking place that needs to take place. And then there's understanding the actual consumer and making sure they are who they say they are. And again, you have things like biometrics that can help. Now, if you check the box on those two things, you check the box on the bank, you check the box on the individual, now you have a system that I think would really work and take the continent to the next level where people can start getting loans, payments in a much more structured manner. And that takes you to the next level. If I, as a bank, can say, hey, this guy or this girl now has a credit score of 800 out of 900, we can now issue them a loan, a business loan or a business line of credit to do X, Y, and Z, as opposed to, going to the bank and don't know what we're going to do. So I think that's where we need to be, and that's a big component that's missing.
Chris, just a quick question on this. So Chris, we need to digitize databases in every market so that we have a company's house type database in each market, voter registration, electoral cards, drivers, etc. That's expensive. We have the AI now to search it, but we don't have anybody willing to invest in that heavy infrastructure lift. And when we see the telcos, they invested in that heavy infrastructure and then they wanted to own it. Sure. So what kind of business model or who on planet Earth is going to do that heavy lifting if they don't have proprietary ownership over that?
Good question.
Sorry.
So I think, let me just help out. I think, like you said, who is going to do that heavy lifting? And I think, to be fair, policies and regulations are supposed to help, because the governments are supposed to play a role in ensuring that we have these unified databases and all the data, because Africa, like we've said, has grown in the last 10 years. So there's petabytes and gigabytes of data all around, scattered across different infrastructure, different databases, different companies, and different walks of life. So I think regulations need to help, right, to unify these systems, and then everybody can connect into a central source. Because today, if you want to give out credits to guys like me on the streets, you need to be sure of our historical transaction patterns, our credit history, and the likes. And there's no single source, like Chris said earlier. Every bank has like silos of data, left, right, center. If the government can help, right, because that's a huge project that is going to be capital intensive for just one private firm to just embark on. So I think, yeah, to answer your question, it's mostly going to be driven mostly by the government and regulators to
Oh,
help.
you really are young.
I'll let him speak. You can't wait for the government.
Speak to hear.
You can't wait for the government. But I'll let Gbenga.
You're not going to leave that one down. No, I also think like there is, I think to Elizabeth's point, I think there's like space for business model innovation here. The way Chris was describing it is, I think you're talking about the telcos. I was talking to somebody from Vodacom yesterday, and they do lots of sort of consumer lending, and they were saying, we have all of this data. You would think they have a lot of data, but they said, we don't have any data outside of how to use the phone. And sometimes that's not useful enough. And on one of our products, our loss rate is about 35%, right? Like if we were able to have access to data that other people have, we could bring that down to 5%. Now that's a huge telco, right? So I think like there's business model innovation that's going to happen here. The question is it going to be independent companies or is it going to be different existing companies coming together?
I think, yeah.
We already have, look at a place like Nigeria or South Africa, you already have like, if you take one customer, their data file is spread across 5 companies, right? Or across 4 companies. And those companies already have APIs and those companies are already kind of pushing stuff. So, I think there's an opportunity here to not necessarily kind of, wait for regulation or kind of hope that you're going to have like FICO score type thing, but actually innovate and API our way, right, into like, these capabilities. Like if you look at, like sometimes, let's look at real-time payments and open banking, right? If you're here in London, you work in finance sector, PSD2, was a thing, right? PSD2, open banking, all of that was a thing, right? And then regulation came into place and then everybody had to do it. Right, like folks on the continent without any PSD2 were building open banking capabilities, right? Folks on the continent without, Moniepoint and other companies in South Africa were doing the equivalent of real-time payments, right, in Nigeria over Interswitch rails without there being a regulation for real-time payments. So we didn't need to wait for the government to say there's got to be real-time payments. We didn't need to wait for the government to say there's got to be open banking for people to actually like have all this mono-okra and everybody trying, right? So I think there is a real possibility here and a real opportunity actually that, the ecosystem itself gets its act together and say, how can we like actually help each other and like, share this information. And it could be either be a third party, opportunity for a third party player, or it could just be something that develops as a protocol.
I think if you look at, again, one, I think we shouldn't kid ourselves, like the systems that exist in North America and in Europe are far from perfect in that either. You're still sending pay slips, right, over email for a remortgage and all that nonsense, right? So I think not to kid ourselves that the systems everywhere are very broken in that. And I think to your point, Gbenga, it is an ecosystem play. And it needs to be ecosystem play. But back to the point of Elizabeth, you cannot be proprietary about that. You cannot be cagey. Everybody needs to come together and recognize that it is for the greater good, for lack of a better word, right, to say that there's going to be better innovation for everyone that happens. Is that through, again, like, open API standards and aggregator players? Yes, but it probably will take a lot more multiple of those aggregators. I want to shift a little bit to market dynamics, right? And talk specifically around, we've obviously landed ourselves in 2023, which everybody was hoping was going to be like a, road up. And instead, I think we're all seeing and feeling the market dynamics that exist today. Gbenga, talk us through a little bit more in terms of like how that is impacting, fundraising on the continent. Tell us a little bit more also in terms of how those market dynamics are, affecting maybe some of the potential valuations or exits that, we're seeing.
Yeah, so I think if you look at investments on the continent from that lens, it's a sort of, a tale of two different stories, right? If you look at sort of like very early stage where the market is dominated by local players, angels, people who are on the ground and kind of, understand what's happening in the market and also live in the market, you can see that sort of valuations and investment activity has relatively held, right? Relatively. It hasn't kind of had the jump that it had from 2020 to 2021. But like there's still a lot of activity happening there and things are holding. When you move to the later part of the market, that's where I think there's been a lot of challenge. And part of this is because like, as soon as you kind of move past Series A, or as soon as you get to Series A, you kind of move past that. A lot of the funding dynamics is actually dictated by investors, kind of like outside the continent. I think on the continent, we have 2 or 3, maybe 3 or 4 actually, major Series A, B type investors. And what's happening everywhere is being sort of pushed, right? Risk rate in the US is, is up. Everybody's kind of pulling back. The expectations are very, very high. And people are now starting to ask questions around kind of like, unit economics. What is like the sort of like, real opportunity here? And let's be honest, like the FX regimes and the performances in Nigeria, or everywhere actually, Nigeria, Kenya, Egypt, haven't really helped. So I think it's a tale of two stories. On the earlier stage of the market, we're kind of seeing things hold like a little bit. In the later stage of the market, things are like a little bit more difficult. The buy is actually much higher. First of all, the buy is higher everywhere. The buy is higher in Europe, the buy is higher in the US, but then the buy is obviously then proportionately probably even higher like on the continent. So I think that's kind of like what we're seeing, and people are retreating to fundamentals. I can also say like, even in this market, deals are getting done, right? I think there was a tendency that everybody got carried away, sort of from end of 2019 to kind of beginning of last year, and we also got carried away, I think, on the continent. And the impact of that is like when you look at payments businesses, right? For 2-3 years, everybody was just looking at everybody. You just come to a pitch session. We've got APIs. This is our revenue. Boom, boom, boom. That's it, right? And now people are looking at like, what is your contribution, margin? Like, what is really the unit economics? How much does it take for you to get $100 of revenue? These are questions that I think some founders, to their own, not to kind of rain a parade on founders, but some founders actually grew up in that environment where you get asked, right? Like, this is $100 of payment revenue. Where is it from? How much? What's the cost of that? And people are now starting to ask those questions. And so the fragmentation that we have in the payments landscape, again, minus places like Kenya, is really starting to kind of favor like smaller players. So I think that's kind of, what's happening. Well, 3 things. 1, tale of 2 stories. Things are much more tough on sort of the growth side of things. 2, the buy is higher everywhere, and I think everybody just has to deal with that. But 3, with regards to Africa, like, it's gone beyond our time is show a nice slide and show a, sort of a McKinsey BCG number. It's gone to like, it's $100 of revenue. What's the unit economics of that $100 of revenue? Because now you can just look at PayPal on the stock exchange and say, oh, that unit economics is, 150 times better, and I'm just going to get better price, so I'm not going to pay for it.
Yeah, I totally agree with you. And I've been teasing Solomon, but, I'm a big fan of what Moniepoint has done, and we've been a client of yours at times. And, you guys were born when it was saturated with tons of payment companies, so you had to differentiate from the start. I mean, if you look even 5 years before, there were just a few of us wandering around in the dark. Like, there was so much space, it was hard to understand where we were going to specialize. When we think about, like, starting with MFS Africa, Cellulant, and AZA, we thought we were competitors. 10 years later, we're like wildly different businesses. But at the time, it was just payments, and now Moniepoint is like so specific. And again, that's, I think, to the advantage of move faster, grow faster, understand what your purpose is. And, in sometimes frontier markets, it can get a little murky because there's nothing built yet.
Yep.
And I think now we've seen coming out of that saturation period and still growing is really impressive.
Yeah. And I think like there's also like in payments, there's this concept of sort of, what I call payments plus. Like, so if you go on like sort of look at fintech companies that I've listed in the last, say 10 years. So look at PayPal, look at Bill.com, look at Amex, look at everybody. If you look at the sort of percentage of transactional revenue, those numbers are wildly different, right? So you have somebody on one hand, you have like a PayPal. I think when it went public, the percentage of transactional revenue was about 92%. That number today is 28%, right? And so you start to build other services on top of this, right? Because if there's one thing that is going to be constant to payment founders in the room and people working in payments, is that your take rate is going to go down over time, it is going to go down over time. If you go and look at any public company that is payments and look at the effective transaction or unit revenue, it's gone down. Amex, when it went public, was 5%. That number is about 2% today. And so really what I think is interesting and what's happening is you start out as a payment company and you kind of but you can't remain just a transactional revenue. You have to be able to layer services on top to actually stay. On the flip side, what we're now seeing as well is companies coming from the other side, right? Where, like, for example, I think in Build.com's case, when they went public, it was something like, 17% was transactional revenue, and that's 62% now. Which is you also have companies that don't start out as payment companies. They start out as commerce companies. They start out as something else, and they kind of roll their way back. So I think, the whole idea that you can just be a sort of pure payments company, and that's kind of what it is. As you said, when you talk about sort of, I hate to use the word ancestors in the space when we talk about it, right? So Cellulant, you guys, Interswitch, obviously, all respect Interswitch. I think like that's one thing. Like, you can't just be a pure payments company. Payments becomes the means to an end to a certain extent.
I mean,
and that's important.
Payments across the board, right? I think highly commoditized, especially as more entrants come into the market and more innovation and infrastructure is available. Mindful of time, I do want to pivot into kind of some of the other market dynamics that have had some of the adverse effects due to maybe some of the economic shifts. Solomon, you talked a little bit about, the talent availability. How do you see kind of, for lack of a better word, the brain drain in some of the places affecting being able to kind of access some of that right talent?
Yeah, so I mentioned that because today in like Africa, you have a lot of like I said, young guys like me, like migrating, going to other countries, looking for, in quotes, greener pastures. But in reality, this brain drain is affecting the talent pool in African countries because speaking to in terms of payment space and all, the hard work of building these innovative solutions, building innovations and all requires talent. And then the cost of paying these guys that are not local and are not in that country, outside of the country, is growing exponentially. So I mean, FX regulations and all is not really helping because you're making revenue in your local currency and then you have to pay somebody in foreign currencies. That's very difficult. So I think we need to find a way to preserve our local talents because that's one of the major challenges that we're having today because a lot of people are leaving local countries. But except for companies like Moniepoint, now we have been able to break out of that space, right? And we are able to pay people globally today. So, I mean, I currently work out of UK, some people work out of Germany and different countries, and they're able to pay these staffs what they want. And if Moniepoint was not able to do that, they would have probably lost some major talents that would have affected the company's infrastructure and the building process. So I think that's also a very important part. And to help with that, I think what's it called? FX regulation, monetary policies should help so that when you earn locally, you can also compete globally with your revenues.
Can I just, sorry, go on. No, I was just going to add to that. First of all, I didn't know that's where all our money was going. So it's good to know it's just paying people that live outside Nigeria. But I think, there's a ecosystem talent problem for sure, Exodus, and that happens in multiple places. But there's one thing that's not talked about enough, which is the development of sort of local talent, right? I was talking to a few founders a year ago, and I was talking to them about their talent plans, and they told me we plan to hire this, and we plan to change, and I said, what's your attrition plan? Right? The attrition plan is kind of a baked in. You got to front load it. So your engineer doesn't actually cost you $100 if your attrition is 20%. They cost you $120, even though you're paying them $100, right? You have to build in. It's part of the cost of doing business. And there's also another sort of, again, maybe, as an investor, on the one hand, you can look at things really pessimistic or optimistic. The optimistic view is out of Interswitch, Moniepoint was born, in a sense, right? The people that built Moniepoint came from Interswitch. Elizabeth, I think sort of there's at least one or two other companies that people from AZA have gone on to build, right? And so I think you also have this thing where, again, if you look at the ecosystem where companies are actually sort of giving birth to people who are actually going and the network effect is starting to play in. I think we will continue to have sort of short-term tactical shortages It's impossible for an ecosystem to exist without talent shortage, any kind of existing ecosystem. But what we have to do and what companies need to do is to plan attrition ahead and to plan to train ahead. Moniepoint, in case, like all of the early engineers that came from Moniepoint, all product people were locally homegrown.
Yeah.
And I remember when we started to look at Moniepoint, I was talking to a few international investors, they actually didn't believe it was true. Because they were like, how? Like there's no engineering outsourced team in Ukraine. These are all people locally trained, brought to Moniepoint and whatever it is. And so that's an example of the fact that we can do that. Yes, you're going to lose some people. Well, that's a fact of life. Get more people in the first place.
If you pay people global wages, they'll stay. And we have this equalized wages across our offices, and we talk about this a lot. And we really rectified the situation like 5-6 years ago. We're like, this is not okay. Doing the same job, I don't care where you live. Of course, there's cost of living, etc. We bought a company just outside of Durban. We couldn't believe what the guy was paying everybody.
Correct.
We almost doubled the wages. People were like, oh, this is life changing. We're like, I'm really sorry, and no one thought about this before. And I think last year we talked about just last week I was talking about Africa is not a low wage continent. We shouldn't be thinking about it like that. That's bonkers. And when Andela it graduated its first class of $7,000 a month engineers, people were like, how dare they? What the hell? That's what an engineer costs.
Yeah.
So I think, we have to think about people will stay where the quality of life is good if you pay them global wages. And just the second quick point is that investors have pressured us to move out of Africa. And I resisted for 10 years and was forced to move to London. No offense, everybody. But I really resisted, and all of the Nigerian YC Combinator guys who were in San Francisco raised more money, and it was a lot of the early stage guys don't live in the West Africa anymore. And it's not our fault so much as the investors were forcing us to move out of the continent.
It's true. Chris, I know you had some thoughts that you've been patiently waiting on.
Four. So first one, Elizabeth was asking about, focused on me about the infrastructure. I think all the companies need to come together and really talk to create that credit type scoring system and bureau and infrastructure, including ours, because a lot of transactions go through us. If we know who's getting paid, we know your bill is getting paid, So I think infrastructures like ours are key to that. Two, funding. As far as payments go in the payments sector, if anybody here is looking at it, listen to what Gbenga said. Pivot in as many ways as possible, because the cost of transactions via payments is just going to keep coming down. It's not going up. It is going to come down, and it's going to be as low as you can ever imagine. So you have to think about other ways you can make money. Interswitch, as big, as massive as we are, trust me, we are looking at how we can make money everywhere we can. If you go to quickteller.com right now, on the top left-hand corner, you'll see it. It says homes. What the heck are we doing with homes, Well, the answer is we're trying to help people buy homes, pay their rents, pay electric bills, and all of that stuff. Because we understand that the cost of transactions are just tumbling down. 3, if you look at the way to keep employees, I agree with what the other panelists have said. You should. Another thing that I think is worth considering is providing your employees with some kind of program that can educate them and keep them within the company. Another amazing thing that works is providing them with stock options. I know that many companies are antsy about giving away stock options, but if you set it up right with vesting periods and all of that set up correctly, you can keep employees working for your company for quite a long time. Interswitch, yes, we have people come and go, but there are a lot of people at Interswitch that have been there for 18 years. It blows my mind. It's 15 years in. I'm like, whoa, that's fantastic. for companies. So I do think that everyone should consider, again, educating your staff and providing some kind of stock options for. If you are thinking about this whole space as far as payment goes, just realize that the infrastructure that's being built, as we've mentioned, trust is a tough one. It's probably, in my view, one of the best programs or companies to try and get into right now, because there's, as Gbenga and the other panelists have said, that's probably, out of the 3 points I brought up, that's probably the one that's lacking the most. And there's a lot of space for anyone to start a business there and do really, really well. And please think global, don't think local. That's something that, too many people just think of ideas and they have this tunnel vision of their own country. Think global. If you can create a structure that has a global trust aspect to it, even if it's just Africa, that's something Gbenga will invest in.
We have around 10 minutes, and no panel on payments would be complete if we didn't touch around regulation and policy. When we think about a lot of African countries going through government changes, going through policy changes, what are some of the key aspects that are happening today where you're saying, this is really positive, this is really great, and then on the contrary as well, this is not that great, and this is going to hurt us long term in terms of developing, again, that infrastructure. Elizabeth, what are some of your thoughts there?
Conscious my head of marketing is here. I'm going to behave myself talking about regulation. It's too slow. It's so slow. And it's not just in Africa, it's everywhere. The speed of innovation, the way young companies come up and turn around, you can't be waiting 3 years for a license. It's bonkers. And, when we're licensed by the Bank of Spain, by the FCA, by the Bank of Uganda, we have licensing partnerships all around the continent. It's just 20% of my workforce is thinking about this all the time. Not just applying for licenses, but regulatory reporting, regulatory audits, preparing for regulation, strategizing on how to do it. It's a huge cost. Then again, we're in a licensed sector. So, it has to be expected, and it is a barrier to entry. I mean, that's number one. Number two, I think there has been improvement in the variety of licensing, and that's very exciting. Although everything is a little bit slow globally, not just on the continent, we are seeing differentiation. So, when I started in Senegal, the Bissau didn't have any license that wasn't a bank license. They didn't even have a mobile money license. I remember going to a conference where it was like, should we do mobile money? And I'm like, it's 2019, So I think that's exciting that that's come on board. And now you have Wave over there, which replaced Wari, talk about trust. The biggest trusted network in 10 countries collapsed. And you have another one come in. I mean, now we're seeing progress there. So that's exciting. And I also think that certain countries like South Africa and the South African Reserve Bank have been leaders since day one. They're not the most lenient, but they are the most specific. And I'll take specific over lenient almost any day. And even in 2015, SARB had published on digital currencies. That's why you saw the proliferation of those kind of payment companies down there. So I think we're seeing more differentiation. It's still slow. Certain countries are more specific than others. And there's still just a wide variety and not a lot of continuity across regions.
Okay. Solomon, what are your thoughts? Monetary policy, we discussed this a little bit. Where are your thoughts at in terms of where it needs to shift towards? What are some of the challenges and opportunities?
Yeah, so I mean, for Nigeria majorly, I think Nigeria has been one of the countries that has been more specific in terms of its monetary policies and then central bank regulations and because take a look at earlier this year, January, with some regulations that had the whole digital payments drive that just skyrocketed transactions up. Obviously, that's improved digital adoption over time, even if yes, it's relaxed a bit. But that has also helped the average guy on the street to start adopting digital payments down there. And like Elizabeth also said, it's slow, right? Getting licenses, like you need to get a banking license, probably take like 3 to 4, 5 years. I think that can also be improved on as well. And then for payments companies generally, right, it's easier to just jump on the easy regulatory part, but there's the hard work of going to the streets, and that's the major part of the work, going down the streets, making sure that you can meet the locals and doing the businesses. And then I think regulations should also help. Like in Nigeria, there's the SANEF that has always been existing, that give like funds to like companies that are trying to do the hard work of going to these guys down there, and then that also boosted the mobile money and agency banking business in Nigeria. So yeah, regulations like should be a bit faster, more clear, like they should be clearer basically, and then help with payment companies to be able to achieve their goals.
We also talked a little bit about policy in order to protect from outside competition, right? Gbenga, what are your thoughts on that in terms of now we have more competition from, Elizabeth, you mentioned Asia, LATAM coming in, right? Is there a role for, again, government regulation and policy to play to make sure that what has been built by, the kind of founding blocks, that is protected, and how do you go about that?
Well, two things. So one is, personally, no. Like, I think broadly speaking, like I think if you look within the continent, like forget outside your sort of D-locals and Stripes and etc. coming in. If you just look within fintech expansion intra-Africa, we already see fintech protectionism in some sense going on, where like the regulators in one country that would allow some companies to do certain things. If a company comes from another country, then they kind of wake up. Like, I think like that just kind of, that stunts growth. So I think, this whole idea of like, having fintech protectionism, there's two ways in terms of maybe protecting the fintech so that like, nobody can come and compete. I think that's not something that would actually stimulate a lot of growth. Everybody here talks about the, Stripe acquisition of Paystack as like a win for the ecosystem. Well, if we said like nobody could come and compete, then Stripe wouldn't be able to do that, right? So don't forget, it's not just about D-Local coming to process payments next to you. It's about Stripe being able to buy the company. It's about being able to do joint partnership on your remittance provider, right? Like, so, first of all, I think if it's protectionism for the fintechs, we think open is probably generally a better way to go. But then you can, have policies to protect the consumers. So I think there's sort of like slightly two different things here. When you think of sort of consumer protection, in a case where you don't have sort of, foreign fintechs coming and kind of, taking advantage from a price standpoint, from a privacy standpoint of local consumers, I think that's an area that like, there could be some sort of, development and policy around. And just to kind of round it up, because, I'm a lot less closer to sort of policy than everybody here. We take like sort of a video view and look at everything over an arc. If you sat in any panel about fintechs, whether I was here, whether I was in LATAM, India, anything, these comments will fairly be the same. Yeah. They need to be quicker, they need to do that. Like, it's the same everywhere, right? Like, it's not like there is one place. Surely some places are faster than the others, but if you ask people in those markets, it's not fast enough. Yeah. In our engagements with sort of the, SARB, CBE, CBN, and CBK over the last, 18 months, I think like the approach is generally very positive, where in all those markets that we've talked about, there is a concession that you can have non-bank players take part in what is considered normally banking activities. Mm-hmm. Payments, lending, whatever. There is like a concession and then the licenses that are being granted. Now, it could be faster, it could be more specific, but we think generally that, I think the regulators are heading in the right direction. Some need to move faster, some need to be a bit more specific. But hey, we have, how many people here work in payments, fintech in Africa? How many people here? How many people here work in banks? There you go. There you go, right? There's way less people working in banks. Here, no offense, there's a lot of people working in fintech, right? And that shows you that there is a lot of positive where a lot of non-banks can actually play in the space, and we think that's going to continue. Yes, let's be faster, let's be more specific. But if you look generally across everything, I think it's heading in the right direction. That's what I would say.
Well, listen, I know we're literally like just top of the time, but I do want to close us off and Chris leading us in looking at the next 10 years, kind of top 2 things that need to happen and that are non-negotiable in terms of the payments landscape in Africa.
Next 10 years need to happen. It goes back to, I think, what we started with. It's creating some kind of trust platform in order for transactions to happen without any disparity and confusion on who's sending money and where money is being sent at a speed that is beyond comprehension. Then the tracking of that, the money, I know people are looking at blockchain and all that, but ensuring that the money is tracked and utilized for the purpose that it's supposed to be used for, I think is also part of the whole financial model that governments are trying to put in. Like, you know, if you bring money in here, I have to monitor what the money is being used for, mostly with FX. So that whole cycle and connecting the dots from A to Z needs to be brought in with a trust factor in there. And I also think within the next 10 years, we need to start seeing regulatory aspects from governments put into play. We've seen what Rwanda has done, Tanzania has done, Zimbabwe has done, Ghana. I mean, these are amazing countries that have looked at financial regulations and said, we want to do something really good about it. We can't do too much without governments, you know, literally. I'm not talking about building infrastructure, just government regulations. The government actually needs to take a proactive measure and saying, we want to help the fintechs and money movements move faster, easier, much more reliably between, you know, country to country and within the same country. So that's what my view on the next 10 years needs to be focused on.
Okay, Gbenga, Solomon, Elizabeth, each one word in terms of what's the top 1 priority for the next decade.
Can I say 2 words? 3
2
words?
words is fine.
Okay, IPOs.
Yes.
No IPOs, no future. IPOs. And then a request is, can we sort out intra-Africa payments? Thank you.
I think adding to what you said, lending, because we need to start giving out more credits to the masses to build wealth. So yeah, lending.
I think it's globally great, like global best practice, because we can't rely on it just, you know, the protectionism or because you speak Wolof or because you have a local uncle in Dar es Salaam. It's really going to be about, you know, your business model is world class, and we're seeing that now. We're seeing world class companies come out of the region, and through resilience and through everything else. So I think we're going to see world class.
Awesome. Well, listen, this has been a great panel discussion. So thank you to all of you. And also I look forward to seeing you probably in the next year as well and hearing even more progress, because I feel everything's accelerating and you should all be very proud of all the work you've done to make that happen. So please, a big round of applause.
Thank you.
If you have any questions, yeah, we can take 2 questions. Sorry, guys. We're going to take 2 questions. Chris, Gbenga, we're going to take 2 questions. Okay, there was a question somewhere here.
Down back.
Yeah. What?
So, thank you so much. I sort of just had like a masterclass payment, right? I like how you wrapped up with policy, but I still think that it's so big. I thought I would hear collaboration and partnership as one of the words. Because see, you can build something great, and on the night the government wakes up and they say, we don't like it, they shut it down. I'm talking because I'm from Nigeria, right? And so it's important for me that while we're building all this wonderful products, that the private sector should be very serious about bringing government into the room to become partners. And this is because a lot of the policies, and I don't like to use the word regulation because regulations means like you want to be boxed in, legislations that will support Africa, especially the tech industry, will be coming at the intersection of disruption and displacement. So this is, while you're building your wonderful product, there's displacement happening, and the government has to shoulder that, right? As much as your innovations are working and we're happy, for example, I was talking with someone, the guy that created the bank app, or the lady, did a wonderful job. So you and I don't have to go to banks anymore. But then a lot of people lost their jobs because we're not going to banks anymore. And then the government came in and said we would give 2 million jobs. But then you just made 1 million more people unemployed, and so the government has to deal with 3 million people. My question is, how are all the stakeholders, right, in the Africa tech system, how are they working hard? Because I like how, you're saying to Solomon that, oh, he's young, because he's pushing policy. But it's important, how are we working hard towards making sure that the government, right, is brought into the room? Yeah. Because the government it's a human being like you and I. How are they brought into the room while we're building all these wonderful things? Because they are slow because we're not carrying them along. How are we planning to carry them along?
Just sorry to answer this. I've written 4 different white papers for the Central Bank of Nigeria on digital payments. 4. I've been to conferences from 2015 to 2020. I spent half my life in Abuja. At a certain point, I left politics 20 years ago. I work in business now. So, 20% of my P&L can go to spending on this, but, can't do it all. I'm not going to have a profitable business to even exist if I spend half my budget on lobbying. Yes, we work with government, but at a certain point, we can't do it all. We can't do it all. So I think right now, given the current state, you have to work with what we got. So if a business wants to thrive and survive, sure, participate, but, I can't go ahead and start a credit bureau in my free time. Maybe a little bit. But
the white paper isn't the way to go. I helped to pass one of the fastest acts, which is the Nigeria Startup Act, right? The CBN guy doesn't want to read a white paper. He just wants to hear the story.
I'm also running a business, so how much can a business owner do? That's the big question.
Get involved.
Okay, maybe you need to Google. I'm very involved.
I think probably, right, it's back to the collaboration piece that we mentioned earlier. It does take an ecosystem, and I think every single startup is involved in one way or another in that. But it does then take, I think, government to further lean in, and I think the FCA here in the UK is a great example of that, to further lean in to say we are open to taking what has been created and implementing it, right? It cannot just kind of fall on, again, the private businesses who are trying to. But I think it's about collaboration and having also leaders like yourself come in and say, well, let's go and pass this, right? One more question in the room, and then we'll definitely wrap up. Okay.
Is there lessons to be learned from Brazil and India, like PIX, Nubank, these types of things?
Yeah, so this is one of my favorite topics, given the fact that we are very big investors in those regions, and we have a concept within a firm called GeoArb, this geographic arbitrage. So where we basically look to we look to areas or to geographies where we know businesses that exist, and we take them to geographies that that we don't know very well. We've been fairly successful with this. Nubank is an example of an investment that we made because we had made an investment in a similar company in the US, and we're the second investor in Nubank. We've done a similar one in India. So part of our thesis of investing in Africa actually relies on the fact that we can learn lessons in India and in Brazil. There's just 2 things to note, I would say. I spent 2 weeks in Brazil, 2 weeks in Mexico at the start of my job, speaking to, I think, about 35 portfolio company of ours to see the similarities with the continent. There's 2 things to say. One is there's obviously lessons to be learned, both positive and negative. So you can look at Brazil, you can look at sort of RTP, or you can look at sort of UPI in India, all these things that you can look, well, maybe we shouldn't go that way, what the impact is going to be. So yes, there is that. The second thing is we always say Africa is kind of lagging LATAM in a sense, or Southeast Asia. But they're still fundamentally very different places, right? If you think of sort of user behavior on some things are very, very different. Trust, all of this is very different. So yes, there are lessons to be learned, but I fear that if you try to just kind of copy one-to-one, do kind of like a Novo Cargo or PLX, whatever it is, or a Jupiter in India, and just put that in Nigeria, you're going to be stuck in the middle and you're not going to go anywhere, right?
Any other thoughts on that before we close out? No? Okay. I think we're all set. Thank you so much, everyone.